Hi, Catalina here. Wanted to address what are the implications of Biden's loan forgiveness program that was just announced to you as a lender. So, if you're a loan officer or a lender and you are in mortgage lending and you want to understand how you can provide the information to your consumers or your consumer nurture emails that will help them or your digital media assets or whatever it is to get the word out there on the forgiveness and how it affects those that are trying to get a mortgage, this is what this short video segment will be about. So stay tuned. If you find that this information is helpful, please do not hesitate to share, to subscribe as well. So we work with mortgage loan officers to help them systematically close more loans by addressing student loan debt. So the fact that we have this forgiveness is the student loan forgiveness really impacts our business and it impacts our lending partners. So first and foremost, let's talk about what is the program details and then how does it affect the ability of a consumer to get a mortgage. Okay, so first of all, Biden just announced a $10,000 forgiveness for those earning under $125,000 or household income under $250,000. Okay, it's a means tested to attempt to reach more moderate income earners. $20,000 of forgiveness will be given to those who took out undergrad and were loans that and were also Pell Grant recipients, which means Pell Grants go to those that are considered low income. So there's $20,000 of forgiveness for those individuals. So those are the program details. Additionally, the income-driven repayment programs for undergrad loans are going from 10% to 5% of their discretionary income, which is a formula. But that means that if your income shows you should pay $300 and you only have undergrad loans, well, now it's going to go closer to $150. Okay. That's a huge implication because that affects DTI and your ability to buy a house. So Biden made these announcements, and now how does it affect your borrowers? Number one, they say that an estimated 8 million people already have their income filed by the government, so there's going to be some form of automatic forgiveness for those borrowers. The Department of Education has historically done a very poor job of automatically rolling out anything. There's been a lot of errors, a lot of mistakes. So I don't always bet on having the government do anything automatically. They make errors. Then they say secondarily, they're going to roll out program details for the remainder of the 35 million who don't have their income filed, okay? This is especially where LoanSense can be helpful. We can help people understand what the qualification process and criteria is so they can submit the appropriate paperwork and ultimately qualify for this $10,000 of forgiveness. This helps because the payments will continue to be paused until December 31st. That means if you're using a Fannie Mae loan counting 1% of their loan and they have a total balance of $50,000, well, then you're going to be counting 500. If they get this 10,000 or 20,000 of relief, you'll be counting 400 or 300, right? They get better yet. If it's undergrad loans, they get kicked into repayment. The government shows that they only have to pay $50 and you can use $50 for Freddie and Fannie and FHA loans. That's incredible. That will free up that remainder of the amount from what their previous balance was. Let's say it was 50,000, so it went from 500 to 50. That would be incredible, right? That $450 now freed up their debt to income to be able to buy a house. Those are some of the implications. LoanSense is here to help consumers understand what to enroll in, as well as how to systematically analyze your data and your lender's data and your organization's data to identify said individuals from the point they enter your pipeline and get them on the pathway of closing and pre-approving loans at a higher rate as well as a higher loan amount. Okay, so I just want to put that out there because there's huge implications in these forgiveness programs to help you as a lender for the positive. Because if you can provide them, borrowers, with these answers to help them further their financial health and stability, they will feel more comfortable and more psychologically prepared to buy a home. So we are here to partner. We are here to obviously be your partners. Lenders are our customers. They do launch our data bridge, which allows us to automatically analyze their data, analyze their pipeline, and automatically invite the right consumers to reduce their student loan debt and systematically close more loans at higher loan value. So if that's of interest, we definitely invite you to a demo with our sales lead. We will be posting a link on how to schedule at the end of this video. We hope this helps you understand how the loan forgiveness programs impact your consumers. We also released a consumer video on this channel, so do not hesitate to share my consumer video with your consumers. as well as any other material we provide through email and our social channels, as well as YouTube, to educate as many consumers as possible, because education is power. And with education comes psychological safety to make really big financial decisions. And that is part of what we can help you do. We can help you make borrowers feel more comfortable and systematically analyze how we can help you close more loans. Lenders rely on us to systematically address the needs of this generation. So again, our website, myloansense.com. Don't hesitate to schedule a demo. And we hope this information provided helpful tips and hints on how to close more loans for student loan borrowers. Thank you and have a great day.